All right, guys, I promised it. So here is my foolproof way and the steps that I'm using to help people and all of my clients get these PPP loans down to actually grants where they're no longer considered loans. All right, I know you guys have applied for the loans, you've received them, or you're going to be applying for them this week and hopefully receiving them soon. And this is going to be wonderful for your business. It's going to be great to help your employees, or if you're the owner and you're taking a paycheck, to keep yourself afloat. I know these are tough times that we're living in. The economics are just downright awful, but this is a little bit of a life raft that the government has given you. And the biggest thing in receiving these loans is you want to be able to make it not a loan. You want this to turn into a grant. And so there are very specific things that you need to do to make sure that it's not a loan at the end of the 8-week period, but instead it is a grant. First thing you guys want to do, it's like in real estate, it's location. With these PPP loans, it's document. You've got to document everything you're doing. And the first thing you're going to want to do, very first thing, is you're going to want to contact your lender and make sure that you have everything that they want, all of the documentation pieces that they want, in the way that they want you to provide them. Okay, because ultimately the bank is going to be the one, your loan provider is going to be the one that will determine whether or not your loan is forgiven, or if it's a loan. Okay, and you are the ones that have to pay it back. They want these to be loans for you because they don't want a 1% loan for 2 years. They want to get their 5% and get out of it and get paid by the SBA and then be done. So document. Go to the bank. Figure out what they want. Let's do it the way they want it. Present it how they want, and then basically from here on, it will follow these steps to make sure that they get exactly what they want. All right. So there are a few rules with this loan. 75% of this money has to be used on these items. Okay. So it's payroll, not the employer's share of payroll. Okay. So that means if you have, if you're paying somebody, let's say $10,000 is your payroll for the month. And you're going to have an extra $765 in an employer portion of FICA. Only the employee portion is deductible. All of the employee's expenses, but not the employer expenses, are, when I say deductible, I don't mean deductible, but forgivable. Okay, so we want to get these forgivable. So 75% has to be used on payroll, health insurance, or retirement. One of those three things. Okay. And so we want to make sure that these three things are absolutely covered, and 75% of this money is going to these three things. If it's not going to these three things, then it's not going to be forgivable. Okay. The next is the rest of that money, the other 25%. So like I said, it's you're getting 2.5 times your monthly payroll, but this is only going for 8 weeks. They're only looking at an 8-week period. And so the other 25% is a little bit of your overhead. They want it to go to rent, they want it to go to utilities, and they want it to go to interest. Now, all of these things, you have to have contracts in place prior to February 15th, 2020. If there's no contract prior to 2020, it cannot apply. So you want to make sure that if you have rent that you signed recently in March, unfortunately, it's just not going to qualify, so you don't want money going there. Okay, if you have rent that started in March, then you're going to want to fill up this bucket first, and only this bucket, and not use any of that. The utilities, that doesn't say anything about the the February 15th date on that one, but the interest it does as well. So if you have credit cards, if you have mortgage interest, not credit cards, but if you have mortgage interest prior to February 15th, that will qualify. All right, so here are the steps that I'm teaching to all of my clients, so that they can make sure that it is documented just perfectly, so that this loan can be forgiven and turn into a grant instead of a loan. The first thing I'm telling them to do is actually open up 2 separate bank accounts. Okay, the reason for this, we want the money to go in from the PPP. We want it to go in at a 75 and a 25. So account number 1 has 75. This is your payroll account. You name this payroll account. You name this PPP payroll. And the second account is PPP overhead. So it's your rent, utilities, and interest. So those are the first two steps: is open up the account, separate the money into two accounts, and that's the only deposit that's going to go into these two accounts. You want to work with a banker. You don't want to be paying bank fees or anything on these accounts, because if you pay bank fees, that you're going to have to make that up elsewhere. So let your banker know these are only going to be open for 8 weeks. They're specific use, and at the end of 8 weeks, they will be closed. The next thing you're going to want to do, go rehire all of your staff. You need to make up at least 90% of your pre-shutdown or the look back period that you told the bank that you have. If you said you had 5 employees, you have to go get 5 employees. Okay, you have to make sure that you're rehiring and that your staff is back up to where it was. You can't pay anybody less than 75% of what they were being paid before. You can't pay anybody more than 25% of what they were being paid before. This does not apply to anybody making over $100,000. They have their own separate set of rules. And as long as if somebody's was paid $150,000, if you bump them down to $100,000, I mean, we're talking prorated over those 8 weeks, so it's a pay cut, but they don't really apply like other people. If your staff can't come back to work, if they're not able to actually return, you can have them do remote work. You can have them doing different things, whether that's working on marketing plans, whether that's working on social media. They don't have to be doing the exact same job that they were doing before. You can have them do different jobs, okay? But you have to make sure that the payroll is going to them. All right, so from there, I'm having my clients use their main account. So not paying for the payroll out of this specific use account. I'm having them use their main account. And then we're making direct transfers every time there is anytime money comes out of the account, we're having it as a sweep account. Okay, so it comes in and just replaces that money that was only used, once again, for the payroll, the health insurance. So out of the 75, it's the payroll, health insurance, and retirement, not the employer side, not your unemployment insurances. It's not the fees to file for the payroll, but instead it's the employee portion of the payroll. Okay, we're making transfers for that amount. At the end of the 8 weeks, this is the most crucial thing. Okay, we want to get these accounts down to zero. Okay, we get these accounts down to zero. We get them both down to zero. Boom, you're done. Okay, we're pulling first from the 75% for payroll. We're pulling first from the 75. If at the end of the 8 weeks, in that last week or at some point, we need to pull from the 25 for payroll, that's fine. We just can't go the other way. You cannot pull from this 75 for interest, rent, or utilities, or any other purpose. And if you do, it's going to be turned into a loan. But basically, if we can get these accounts down to zero, and we can document properly that the expenses that we used were in those guidelines, then this is an open and shut case. We document, hand it over to them at the end of the 8 weeks, and it's turned into a grant. Boom, we walk out the door, and we don't have to pay a penny back. Whereas if you don't get these accounts down to zero, if there is any money left over at the end of the 8 weeks, these are going to be turned into loans, and you're going to have to pay them back over 2 years at 1%, and that 1% starts the day you receive the money, not the day it's turned into a loan. So these are the steps that I'm telling each of my clients to use to be able to have these loans forgiven. These are so very important and so very vital, so that you can document exactly what you're doing and exactly how to make this loan turn into a grant. Okay, so it's the PPP, it's the program, not a loan, it's not a grant. But if you don't do it properly, it turns into a loan, and that's exactly what we're trying to avoid. And the last step, if you don't have a plan to have this money forgiven, then contact us. If you are looking for ways to lower your taxes, lower your interest, lower your fees on credit cards and things of that nature, or to increase your cash flow, that's what we do. We help businesses and small businesses and entrepreneurs find ways to lower their taxes, increase their cash flow, and keep more of their money. So if you have any questions on the PPP or on other cash flow items, give us a call. I'm going to include a PDF that you can use, and my contact information is either on this page and in the PDF. We look forward to hearing from you, and we hope this helps.